Good morning, good evening, good night. We're watching this transmission. Tis I, Mike Martins, bringing you a very, very important article. We're looking at a huge no confidence between the banking system within China. The Chinese banking system is moving towards civil war. And one thing that sparks a civil war or banker wars, let's say banker wars. Yeah, there's civilians that work at the bank, but banker wars. The one thing that sparks banker wars is trust issues. Because of just so much volatile manipulation, keeping the masses poor. And yeah, I could see banks just not trusting each other. Because, you know what I mean? It takes one to know one, right? Type of thing, right? Okay, so this is a big one. This is from Zero Hedge, and Zero Hedge always zeroes in on the real deal. That's actually really important stories that affect all of us at our doorsteps. This one's going to affect everyone, because whether you're on the winning end or the losing end on a trade war, I think nobody wins in a trade war. Whether you're on a winning or losing end on sanctions, whether you're on the winning, this is going to be the ripple that's going to ripple the stock market. This is what I think is going to start to tank energy. I think energy is going to start tanking. The energy sector is going to start breaking down, and I think this is the first nail that's being fitted into the coffin. So let's take a look here at what's going on. Chinese banks no longer trust one another as repo rates skyrocket. I don't think these banks trust each other anyways from day one. So, for those who have grown bored of the ongoing U.S.-China trade war, whose escalation was obvious all but to the dumbest BTFD algos. BTFD algos means buy the effing dip. It means to buy a stock or a commodity during when the price goes down. Okay, that's what BTFD is. Buy the effing dip. Yeah. The biggest news of the past week was yet another Chinese bank was bailed out by the Chinese government. The third in the past 3 months, and substantial one at that. So basically, it was kind of a big deal. You know what I'm saying? With over 1.4 trillion yuan in assets, 200 billion, Hang Feng's bank nationalization was certainly large enough to make a dent on the Chinese financial system and the Chinese sovereign wealth fund, which drew the short straw and was told that the bailout the troubled Chinese bank. So it had to bail out this bank. It was told to, because if this bank right here, Hang Feng, it's right here. It's the first one here. Total assets in billion in yuan. So I'm going to open this in a sec. Hang Feng's bailout, I think I'm pronouncing that right, followed those Boshang Bank of Jinzhou, which means that 3 of the top 4 most troubled banks have now been either nationalized or SOE, seized by the government, which is effectively the same thing. So now, governments usually seize the banking system, agriculture system, everything, oil system, like everything. The government starts seizing it when, I guess, the banks can't stand on their own, right? Does the country need banks? It does need a way to regulate its wealth. But if the people can't do it, then the government just steps in and takes it over. Same thing with healthcare, like all that other stuff. Once the whatever they're doing fails miserably, the government just takes it over. They don't want to lose that too, right? So government takes it over. Sorry guys, I'm yawning. And I got all these okay, nobody cares about those things. Okay. Banks, total assets. So we got 1, 2. There's so many of them, and I can't read them. Nanchu Chang Boading Bank. They're very complicated to read, and I can't even read in English, so it's already hard to read in Chinese. Of course, To regular readers, this development was hardly surprising, especially after the post in mid-July, when we saw the 40 trillion Chinese banking system approach its closest encounter with the proverbial Lehman moment. Remember what happened with the Lehman Brothers? You guys, implosions and bail-ins and crashing. You guys remember that, right? Yet, when inexplicably the 4-day repo rate on China's government bonds, oh yeah, and mortgage-backed securities and negative yielding bonds and all that garbage, right? Okay, i.e., the cost for investors to pledge their Chinese government bond holdings for short-term funding on the Shanghai Exchange briefly spiked 1,000% in an afternoon trading. While some attributed the surge to a fat finger is when everybody kind of pushes the button at the same time and supports, or somebody pump and dump stock. The mafia, what they used to do is they'd organize with all different other organized crime families. They'd all dump their money into a stock, watch it grow through the day, and then everybody dump it at the same time. And that's what they called. That's what I know fat finger means. But give me other things, I'm not too sure. Far more ominous signs were already present, and in the aftermath of the Boshang failure, which has sent Chinese banking stocks tumbling. Woo! 1 day and 7-day weighted average borrowing rates have remained low thanks to the huge central bank cash injections, such as 250 billion yuan was described back in May. No longer tenors such as 1 month repo have marched sharply higher. So here it is here, Chinese bond repo. So this is the 6-month negotiable certificate deposits. So, wow. So people are buying these backed bonds. And now, none other than Goldman points out, I like Goldman. I like how they break it down subliminally for you, or allegorically. I love Zero Hedge. And now, none other than the Goldman points out that something is clearly breaking inside China's banking system as one after another small bank domino falls. And as following the Basoshang Bank takeover in the late May, interbank leaders have become more cautious towards the credit risk of smaller, weaker financial institutions. The result: a Chinese banking system in which banks have lost trust in one another. I vote no confidence in whatever that bank's called. Manifests itself in much tighter liquidity in the intrabank market. Well, once your banking starts losing liquidity, it doesn't look good in the short run. With the highest intraday 7-day repo rates staying above 8% over the past month as a question swirl over the viability of the underlying collateral. In fact, as shown in the chart below, a creeping funding freeze among Chinese banks is now even worse compared to the historic episode in the summer of 2013, when the following an aggressive ramp-up in Beijing's deleveraging campaign, repo rates exploded to the point that the banks effectively stopped interacting with each other. Holy max. So there's the 2013 right there, repo rate back in 2013. And there it is in 2019. What? This is a big problem here. You know what I'm saying? Oops. Okay, that concludes. It will take time before conditions will... Okay, China asset management. Okay. Okay, I read up to here. As Goldman observers, the sustained spikes in intraday repo suggests that some banks are still under pressure and having to pay higher costs to obtain funding. That's when the spiral starts to funnel out of control, when they gotta, I guess, pay more to lend. Well, pay more to borrow, right? Banks always borrow, right? A number of action has been taken to ease concerns regarding the credit risk at smaller banks. Smaller banks will never, they'll be bought out. They'll be bought out or engulfed, including the recent equity injection of Bank of Jinzhou by ICBC Financial Asset investment company China Asset Management. ICBC is International Canadian Bank of Commerce, and I think it's China Da, I guess, Asset Management, I guess. Nonetheless, as the bank concludes, it will take more time before market conditions will normalize. I don't think things are going to normalize anytime soon, guys. I really don't believe so. I think it's going to have to reset somehow. Something's going to have to be done, right? Because they're just, you know, renewing or reinstating or their debt and buying it back at losses and buying back their own debt and forcing their citizens to buy up these bonds, these useless bonds that might be not even worth the paper they're written on, right? So, you guys, this is really tricky, especially when now the banks are not, you know, and there's a government takeover of the banking system. You're going to see a lot of, if you thought it was bad as the U.S. removing the Glass-Steagall Act, what was it, during the, not the Obama, was it the Clinton administration when they took the Glass-Steagall Act and allowed the banks to run this muck and basically create their own rules as they go, or renegotiate the rules as they go along? Well, this is going to get worse now. Now that the government, the corrupt Chinese government, is now in this. Watch out. It will take more time before conditions will normalize. Meanwhile, if more banks from the list above or worse, larger banks end up failing, and so far there is every indication that the process is only going to get worse. The Chinese funding freeze could get so large that the most dreaded event finally take place. A bank run among China's largest state-owned banks, which, as a reminder, are also the largest in the world. So now I'm not talking, they're not talking about a bank run where people are pulling their wealth out of the banks. It's not that. They're talking about a bank run where banks are going to be siphoning their wealth to rebuy or repackage or reissue things to try and get out of this whole mess they're in. But it's just not going to fly. You know what I'm saying? I don't think they're going to go into, I think they can't even go into stagnation like Japan. I think they're so overboard that I don't see them becoming like Japan. I don't see them, Japan and Germany, where there's negative rates and kind of in stagnation. Nothing's really moving. You know, nothing's, housing hasn't gone up in 10, 20 years. Fair enough, right? But I don't think China is going to have the luxury to even have that, right? Here's the somebody, Zero Hedge here, shared. 4 largest banks in the world are Chinese. So ICBC, 4 trillion. And you know what? ICBC is our insurance company here in BC. Only one insurance company we deal with is ICBC. It's weird. China Construction, 3.4 trillion. Agri Bank of China, 3.3 trillion. And Bank of China, 3.1 trillion. Now that we know China's response, it's time for the U.S. to counter retaliation. One final, if key, point. It's not just Chinese banks that are in funding Pearl. Well, they have no liquidity. That's the problem, right? They keep creating debt, but it's just not working, right? Chinese corporations are on the firming line. It says RR. And as Goldman points out, the same report, the pace of China onshore bond defaults is showing no signs of slowing down. According to the bank's estimates, there were 5 new defaults in July, bringing the total number of new defaults this year to 23, Exhibit 1, compared with 38 new defaults that occurred in 2018. Oh, wow, that's a lot. These 23 issuers had RBM of 90.5 billion of onshore bonds outstanding at the time of default. Equating to 0.5 of all onshore corporate bonds outstanding at the start of 2019. However, all these defaults so far this year are from privately owned enterprises, POES, P-O-E apostrophe S, privately owned enterprises. And now the RMB, 90.5 billion of the onshore bonds outstanding at the time of default equates to 3.5% of all the POE bonds, privately owned enterprise, again, outstanding at the start of this year. To us, the alleviated level defaults continue to impact weaker credit as the net issuance of bonds rated AA lower turned to negative in July. So it's the negativity that we need to keep an eye on here, right? So here's another chart here. So the grays here, this is the defaults, new defaults. And that's defaults. That's issuers total normal amount of onshore bonds outstanding at the time of default. So, oh man. What? Okay, this is actually a lot worse. This is actually really bad. It just hit me like, when you're driving and you're half asleep and you hit something or you hit a tree and you look like, oh, what happened? Whoa! Well, this just hit me, okay? For those curious, below is the comprehensive, if not complete, list of Chinese corporations that have defaulted since 2014 when China first started permitting corporations to fail. Smaller companies have been omitted. Wow. And that's their value in billions. Wow. Guys, this is not good, man. That's why we're seeing huge movements in gold and Bitcoin. People are losing. See, when the banks lose confidence between each other, that's really bad. When people lose confidence in banks, say, it's just a guy. He doesn't like us. This group doesn't like us. I think all-time confidence in the banking system, all-time confidence, consumer confidence in banking in China is still above 40%. They're like, yay, we could do this, we could pull this through. But Australia, they're sitting on 11% after the Royal Commission stepped in and actually took a look at their books and started looking at what these banks were doing. Guess what? Consumer confidence in banking and using their products and stuff is less than 11% in Australia. China still believes that they still got the fight in them. They still believe that they could combine their wealth to get themselves out of this. But I think it's so far gone in China right now, especially with issuing these bonds and buying back bonds at negative yields and issuing bonds at negative yields and buying back debt. And I think the Bank of China is going to do what the Bank of Denmark is doing. They're just going to start paying their citizens to borrow money. The Danish banks are doing it. I did a video on it here. Listening to music there. I did a video here about that the other day. People keep asking me, oh, why don't you talk about this? Why don't you talk about that? I have them all here. Look, Australian weekly housing wrap-up. U.S. credit card interest rates hit highest levels in 25 years. Banks are now paying people to take out a mortgage. Watch that video, guys. Canadian weekly housing wrap-up. Lots of good stuff on my channel, guys. Go to like this. Go to my channel like this. And just browse it. The newest Mike and the Knights right here. Good guests on the show. Let me know what you guys think, guys. This no confidence feeling in banks. No one trusting each other. That's what gets you into a banking civil war. Or bankers war. Or corporate wars. Whatever you want to call it. And don't forget to hit me up on Patreon if you want to buy me a coffee. Let me know what you guys think in the comments below. Thanks for watching. Share this video. This is actually important. Like this is like a big deal. Because this is going to be the domino. China, because Australia, for the English-speaking world, Australia is the first one that's really going to implode. Australia is going to go into negative interest rates. Australia is going to go into deflationary period, then hits, and then it's going to hit stagnation, and then they're going to try and prop crap up, and it's going to go into inflationary period. So they might go into negative interest rates. So guys, be careful. Keep your eye on the prize. Kind of watch what's going on. But I think once China goes, or once China starts to shake, once China stops investing in Australia, Merry Christmas. It's over. Let me know what you guys think. Comment below. Thanks for watching.